And we're live. It is Saturday. It is September 11th. We all know what that means. Never forget, 20th anniversary. Big deal today. But I'm the Sherpa. I'm the stock Sherpa. I'm the stock analysis on the AFRM stock Sherpa today. And it is college football Saturday, and it's early in the morning. And I want to get this out for you all. I feel like I have a firm grip on this one. I feel like this is a firm I could work for. Get it? AFRM. All right. No more dad jokes. Let's get right into it, guys. So welcome. This is the stock analysis earnings call review. For anybody out there who isn't familiar with the channel, this is what we do. I do at least one of these a week. I'm going to bump it up to 2, and we'll get it figured out. But here's the deal. It's nothing but a simple Sherpa, straight buy, straight long-term hold, straight dip trade if you want. And I got an entry point for you as well. So let's just bring it up. In the meantime, take a look. Don't forget to follow Ever Bullish on Instagram. This is where I'll put out some of my trade tickets. This is where I show the advantages of shorty, for example. I'll also throw some funny things up, like people that buy Breitling watches. Just the good stuff. Just bro culture and stock market culture all in one. So without further ado, what's the deal with AFRM, huh? We all know about the Amazon deal, right? We all know about the growing microfinancing industry, DeFi, getting away from credit cards, fighting back against the man, which we're all about here at Ever Bullish. And AFRM does all of those things. So if you're looking for a quick video, just get that. I want you to buy this. I think it's a great stock. I don't think the run is even close to over. Here I got the Sherpa straight buy, long-term hold dip sector trade. See my takeaways if you want to download the downloadable PDF. Here we are. This helps me with clicks, by the way. If you click and download, I believe it helps me out. No, that PDF doesn't look great. Let's go back here. There we are. All right, so what's the deal with AFRM? AFRM is a financing company considering itself somewhat fintech, somewhat bank. It's the first mobile first commerce in the United States and Canada. The company was set up in 2012, just on the heels of the financial crisis. I found a lot of passion in this call, in the earnings call on Thursday, about the owners of this were literally just some young guys that were in San Francisco, and they're brilliant, and they're trying to set up a bank, and they're on the heels of the 2008 financial crisis. They wanted to figure out, hey, what can we do to buck the system and make financing and credit and pay as you go, and merchants, let's help merchants and consumers all in one, because a lot of these people aren't going to have very good credit. So I think that's great. They operate in US and Canada. They have some brick and mortar stores. No, they don't. I'm sorry. They have direct consumer brands. They have merchants that are small businesses. They have large enterprises. They have brick and mortar stores, companies. The merchants represent a range of industries, including sporting goods, outdoors, furniture, home, travel, apparel. And now what? Amazon, right? The Bezos Bay. They've got the money flowing in from all over the place. Again, the cherry on the top. I'm going to ask you this question. Was the cherry on the top the Amazon deal, or is the cherry on the top all this other information? Because I think the Amazon deal would put this at a straight buy all the way up to $200. However, all this other shit's even cooler. So stick with me. You'll know I like to leave the X's and O's up to you guys. We can go over what the numbers were. If you look back the last 3 quarters, they had an EPS miss of almost 100%, but a revenue beat. What does that mean? That means reinvestment. Also, that means that that's when they probably went public or close to it, because that would be when they have the shares diluted, right? Then we've got the revenues. So September 9th, they had a surprise. Yeah, here we are. Q2 21, Q2 21. They basically crushed earnings, guys. You can kind of look into those X and O's. They're everywhere. But the main thing is that they had this beat. And when they had this beat and this surprise revenue, it really shows how much serious lock on the market they have there. Remember, we have Lending Club, right? We also have what did we have? We had Lending Club, and we also had the other one, SoFi, right? SoFi and Lending Club, other microfinancers, other kind of throw the kitchen sink at it and figure out what we're going to do as far as unbundling of the credit card industry, helping consumer finance, most importantly, helping merchants so that they can grow, right? So here we are. Here are the notes from the call. What are they doing? They're building financial products. They mentioned this about 15 times on the call, to unbundle the credit card industry. Oops, excuse me. Unbundle the credit card industry after the financial crisis, right? Having some issues with my emails popping up here. All right, there we go. Their main thing. I mean, how many CEOs say no dirty tricks, no late fees, no fine print, none of this deferred interest charge bullshit. They originally came out with the idea of going after homeware, sporting goods, and plane tickets, right? Here's a chart, by the way. So we have them having this big time cup and handle going on. We have them selling off almost to 50 bucks. And then we have, since August, by the way, I know a Sherpa that may have recommended this to you somewhere around that time. In less than a month, we've gone from 60 up to 124. I put a little line in here for you. So go visit everbullish.com if you want to see the zoomed in price that I'm going to set my limits to get even more of this stock. I think it's not even close to being done. What else did they say? Consumer demand is growing in the fashion and apparel industries. Meet customers where they shop instead of catch all of the tricks of the credit card. So there again, you go to the front of the line, you're about to pay out. Instead of going, hey, we're at Macy's and you're about to buy 5 suits, we're going to say, instead of doing that and applying for this Macy's credit card and having to do all this bullshit, we're just going to allow you to pay over time using AFRM, and that helps out the merchant because it's more conversion, what they call conversion at the checkout conversion. So the Sherpa likes that. I'm ready for some college football today. I hope my Bulls are too. Yeah, so again, they call their consumers, so they've got you as the customer. They've also got the merchant partners. The merchant partners are just basically, the companies. So I like that they have more than one avenue of, it's not B2B, it's not B2C, it's a little bit of both. And then also they are not constrained in the way capital management works for most companies. They never offer a loan they don't believe can be repaid. How many credit card companies can say that, right? How many financial companies can say that at all? There is no junk in here. There is no, C plus, CAA or C++ or CBB or BAA. It's all good AAA rated credit in their mind, so they don't have to charge as much for the risk. All my bond traders out there understand what I'm getting at with that, but I didn't say it perfectly or eloquently. Sherpa, baby. Okay. Constantly adding their services. Merchants love marketplace to drive conversion. So the merchants are loving this because it's like, man, I really want to get my wife this Louis Vuitton bag, but I don't want it to show up on the credit card, for example, right? I don't want it to show up on some of the stuff that she'll know about. Also, I really don't want to have to deal with the extra charges in financing something so expensive. So anyway, constantly adding new services because they're adding AFRM to it drives conversion and the power of purchasing to the customer instead of to the credit card companies. The demand for conversion from the merchant partners there again. So, if there's anything close to a win-win when it comes to finances, I try not to use those words, but this may be it. The big one here is the game changer, guys. So talking about the great credit card unbundling. So they talked about the great credit card unbundling like 30 times. I think it's really cool. The tone of the presenters on the call were truly excited. It didn't sound like they were selling us some miracle bullshit. They were selling us something that they wanted to explain in depth to show how valuable it was. So they have a new product coming out. And it's called the AFRM Debit Plus card. It's the first of its kind. Right now it's being piloted with several hundred people. And there's over 1 million applications from current AFRM customers that are about to be here in a couple months, allowed to just start doing this AFRM Debit Plus card. in place of a current debit card, it turns eligible transactions into pay over time using the AFRM app, the Debit Card Plus app. The beauty of this card is it's powered by software that includes discounts that would help merchants and consumers alike. The beta finishes next month. They will be providing more than 1 million current customers. So pretty badass, right? What's the main theme right now? DeFi, banks are just punitive in the way that they operate. We've got companies like SoFi, who we've talked about on this channel. We've got companies like Lending Club, who we've talked about on this channel, both, by the way, big-time winners for us. And then now we have AFRM, and this is beautiful. Now, notice what I didn't say, right? I didn't say something big here. I didn't say this. I didn't say Amazon.com. You throw Amazon.com on top of that, we're talking about a stock that is not stopping. I believe it's a great buy. This is likely to be in the Ever Bullish One portfolio next year. By the way, go buy it. Ever Bullish One portfolio, Ever Bullish All Stock portfolio. All purchases will include this year and next year from this point going forward. We talked about that last time, so you're welcome. I want to get all you bulls interested and get you guys making serious money before this party is over. All right. So now the Sherpa's back. That's all I got, guys. I'm going to keep it short today. Love you all. Hope everybody has a great day. Don't forget to bet the first half unders in the college football realm, first couple games of the season, and then also overs and all the MAC games. So anyway, Chase Ever Bullish, the stock Sherpa, Chase the portfolio manager on YouTube. Go to everbullish.com. Buy me a cup of coffee for my time. Show some love in the form of maybe some merch. Most importantly, tell a friend, tell a stranger, tell a neighbor. Portfolio management is the new gig economy. You no longer have to pay for all the fat that's on the financial firms. You can have one guy, one man direct to you on YouTube, giving you better information than you can from a large institution. And it's time to take that power back and fuck the man on that one. All right. Hope everybody has a great day. Again, September 11th. Never forget. And AFG, LFG, LGR, let's get rich.